You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Wednesday, 26th day of March, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast, that's our live training room. Now that one's reserved for members only and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, Michael joins us here in about 50 minutes. If he's able to, he's had some technical difficulties this morning. He'll walk you through step by step how to do it on the screen. But bottom line, just go to mytradingiq.com. That's mytradingiq.com. And at the top of the page, you'll see it. 5-day free trial, no credit card required. Click here. Click there. Fill out that registration form. And typically, same day, we'll get your desktop set up, get your indicators indicating, and then your trial will officially begin tomorrow. But not to worry, you'll still get 5 consecutive trading days. In other words, the weekend, it won't count against you. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which unlike the morning broadcast, this one is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There are 2 different ways you can join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com, scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email and it will automatically log you into our platform. The benefit there is you have access to the question box so you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is very easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,700 daily episodes archived for your educational and viewing pleasure. And thanks to the power of YouTube, it's a great way for you, if you're new, to see how we've evolved over the years. Find out who we really are. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, You're not going to watch them all, nor do you need to watch them all. But it's a great resource for you to have as you get to know us, learn who we are, what we're about, what we do, how we do it, and how the whole thing has evolved from the beginning to the present. youtube.com/CFRN. This is our schedule for the afternoon broadcast each and every day. So we're going to go ahead and dive into our daily devotional. The topic that we're on, this is day 11 of 14, doing things that matter. Today's scripture is Matthew 14, verses 24 through 30, and I'm going to share it with you from the Message translation. Meanwhile, the boat was far out to sea when the wind came up against them, and they were battered by the waves. At about 4 o'clock in the morning, Jesus came toward them, walking on the water. They were scared to death. "A ghost," they said, crying out in terror. But Jesus was quick to comfort them. "Courage, it's me. Don't be afraid." Peter, suddenly bold, said, "Master, if it's really you, call me to come to you on the water." He said, "Come ahead." Jumping out of the boat, Peter walked on the water to Jesus. But when he looked down at the waves churning beneath his feet, he lost his nerve and started to sink. He cried, "Master, save me." So today we're talking about leading courageously. When I was a kid, my friends and I often went to the community pool during hot summer days. At the deep end of the pool, 3 diving boards stood ominously challenging every little kid that dared climb their steps. The middle board towered 16 terror-filled feet above the water. I can still remember the fear of climbing that high dive for the first time, uncertain if I would actually survive the ordeal. As I inched out towards the edge, all sorts of alarms were blaring within me saying, "Stop, you idiot." This particular diving board wasn't a solid platform. No, it was a springboard that made each step towards the edge a wobbly nightmare. The edge is a dangerous, scary place. It's much easier to simply dip our toe into the pool than to look down the barrel of the high dive. But for my friends and I, it was a rite of passage. One where not jumping was more detrimental than actually jumping. It was a bad day for the poor kid that chose to turn around and climb back down the ladder and shamefully slip back into the shallow end of the pool. We've all stood at the edges of different things in life, such as a life-changing decision, an investment risk, or even the courage to ask someone out on a date. Similar to the feelings I had on that high dive. Fear, concern, and impending danger are all in front of us. But nonetheless, we have the conviction to jump. We all want to be courageous. The scriptures are full of stories about people who lived and led courageously. One of the most striking things about the story of Peter walking on water is that there were 12 disciples on that boat. But only one had the courage to step out of the boat. Isn't this true of so many of us? We are like the 11 disciples. We love Jesus, but when it comes to the truly courageous and faithful things, we'd rather stay in the safety of the boat. Peter was willing to do the thing that no one else was willing to do. He was willing to lead courageously. What or where do you need courage so that you can lead? Think on that. And let's pray. Heavenly Father, when the storms of life surround us and we feel afraid, remind us that you are near. Just as you came to the disciples on the waves, come to us in our fear and uncertainty. Help us to trust that even in the darkest moments, you are present and in control. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Wednesday. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets or the indices. Currently the Dow is down 48 points. NASDAQ is down 294. That's a little over 1.5%. S&P 500 is down 47, almost 1%. And the Russell 2000 down 16 points. In the commodity basket, crude oil up 93 cents, trading 69.91 last. That's a gain of a little over 1.25%, or $910 per contract traded. Gold down $3.10, trading 22.80 last. Silver up a penny, trading 34.20 last. In the Asian markets at the close, the Nikkei gained 246 points. The Shanghai dropped just over a point. The Hang Seng gained 139. And in the European markets at the close, FTSE up 32, the DAX down 240, a little over 1%, the CAC down 69. So we had a mixed day in Asia. It was a mixed day for the UK. But so far, at the moment, it is a red radio Wednesday here in the US of A. So with that, let's take a look at the news. Well, everybody, I'm sure, is familiar with Signal Gate. Could have been Telegram Gate, but this is just so ahead of the CIA. They handed him a computer with software preloaded on it and a phone. Now, to me, that would be like a massive red flag, especially with a new incoming administration. Anyway, in case you haven't heard the story, Top U.S. intelligence officials faced criticism during an annual hearing before the Senate Intelligence Committee yesterday over what's being called a national security breach. The breach occurred when National Security Advisor Mike Waltz inadvertently added the Atlantic's editor-in-chief, Jeffrey Goldberg, to a Signal group chat earlier this month, during which Defense Secretary Pete Hegseth shared upcoming military strategies against Houthi rebels in Yemen. Now, according to Hegseth and the other good guys, there was no classified data shared. It was simply an example of these men talking behind the scenes the same way they talk in public. The same spirit, the same ideas. Now, you can scratch your head for a long time wondering how The Atlantic, which is about as left-wing and worthless a magazine as you can find, how is it that their editor-in-chief, Jeffrey Goldberg, mysteriously gets added to this Signal group? You think Pete did it? Think Mike did it? Think President Trump did it? Yeah, I guess I'll let you figure it out. Apparently it's above my pay grade. The hearing, which was previously scheduled and supposed to focus on worldwide threats, came a day after Goldberg published a first-hand account of the Signal incident. CIA Director John Ratcliffe and Director of National Intelligence Tulsi Gabbard, both among 16 other high-ranking officials in the Signal group, denied that any classified information under U.S. intelligence agencies' purview was shared and declined to provide specific details about the mishap. Last night, Waltz says he takes full responsibility for organizing the group chat. The incident raised concerns about national security protocols within the federal government, particularly around using the Signal app, which offers end-to-end encryption for text, calls, and file sharing. Now, that has been the go-to app. I mean, these leaders of our country have to be able to communicate in some fashion, and Signal, based upon their studies, was the best option. And again, that wasn't chosen by the new administration. It was used by the previous administration, and it may have been used. I honestly don't know how long it's been used. But the real question, how is it that the last person in the world you would want in this group chat, how did they get added? That's the mystery. And that's what we should all be very, very concerned about. Ukraine and Russia have agreed to separate U.S. brokered deals to pause attacks in the Black Sea, allowing ships to pass safely and preventing the use of commercial vessels for military operations. The breakthrough comes after U.S. officials met with Ukrainian and Russian delegates separately in Saudi Arabia this week. Under the agreement with Russia, the U.S. has agreed to help Moscow increase exports of agriculture and fertilizer to global markets, lower maritime insurance costs, and restore its access to international payment systems. Russia said the Black Sea deal was contingent on lifting some European port and banking sanctions against its banks involved in food and fertilizer trade, which Ukraine opposes. Russia and Ukraine will now need to hammer out details on how to carry out the maritime ceasefire and work towards a truce related to energy infrastructure. The deal comes roughly 2 years after Russia terminated a 2022 agreement to ensure safe shipping in the Black Sea. Archaeologists have uncovered a once-in-a-lifetime trove of Iron Age artifacts in northern Britain. The results of an early analysis of a site known as the Melsonby Hoard in Yorkshire, United Kingdom. The discovery has major implications for historians' understanding of the relative wealth of natives in northern Britain roughly 2,000 years ago. First discovered in 2021 by metal detectorists Peterheads, the trove contains roughly 800 objects, all believed to have been burnt or broken before being buried as a demonstration of wealth. The iron tires of at least 7 four-wheeled wagons and 2-wheeled chariots were discovered at the site, as well as decorative wine mixing bowls, cauldrons, and spears, among other items. The breadth of the objects suggests northern Britain's elites were more wealthy and connected to European trade networks than previously thought. Researchers have not publicized the exact location of the excavation site to avoid looting and theft, because that's the world we live in today. All right, from Bloomberg, Amazon shares are starting to look like a bargain, a word that has rarely been used to describe Amazon stock. The recent drop in the company's share price, coupled with expectations for durable long-term earnings growth, have brought its valuation to levels rarely seen since the company went public in 1997. This could limit additional downside in the event of further weakness in the broader market. You'd be hard-pressed to look at Amazon's multiple here and not see it as appealing relative to both tech and retail, given its multiple secular tailwinds. This looks like an incredible opportunity, according to Clayton Allison, who's a portfolio manager over at Prime Capital Financial. While tech valuations have fallen broadly in the recent market sell-off, the ratio of Amazon's price to its earnings stands out relative to its history. The stock is trading at around 28 times its estimated future earnings, which is roughly half the 10-year average and below that of major retail rivals that used to have lower multiples like Walmart and Costco. It also trades at a discount to Apple, which was several times cheaper than Amazon just a few years ago. Amazon right now trading at $202.73 a share, down $3 on the day, or roughly 1.5%. The valuation has fallen in recent years because Amazon has focused on efficiency and cost cutting, which has lifted its profitability. In the short term, though, the hit has largely been a result of the broader market sell-off. Amazon shares are 6.3% lower this year and are coming off 7 straight weekly declines, the longest such streak since May of 2022. While Amazon is lagging the NASDAQ 100 index, since the beginning of the year, it has performed modestly better than the Bloomberg Magnificent 7 index. Also from Bloomberg, the Congressional Budget Office warned that the federal government could run out of enough money to pay all of its bills on time as soon as August if lawmakers fail to raise or suspend the debt limit. The Treasury Department has been using special accounting maneuvers since January 21st. It's called cooking the books, I think, to avoid breaching the $36.1 trillion debt ceiling, which kicked in at the start of the year. But the department has yet to offer specific guidance on when those measures will be exhausted. If the debt limit remains unchanged, the government's ability to borrow using extraordinary measures will probably be exhausted in August or September of this year. According to the CBO, the projected exhaustion date is uncertain because the timing and amount of revenue collections and outlays over the intervening months could differ from the CBO's projections. The CBO also said, if the government's borrowing needs are significantly greater than CBO projects, Treasury's resources could be exhausted in late May or sometime in June before tax payments due in mid-June are received or before additional extraordinary measures become available June 30th. From Reuters, short interest on the NASDAQ rose about 2.2% in mid-March. As of March 14th, short interest rose to about 15.66 billion shares, compared with 15.33 billion shares at the prior settlement period, which was February 28th. Investors who sell securities short are supposed to borrow shares and then sell them, expecting the stock to fall so they can buy the shares back at the lower price, return them to the lender, and pocket the difference. Unfortunately, the regulatory bodies that oversee this have failed to force this 3-day to cover rule for many years. In fact, it was that very issue that was the impetus for the creation of CFRN. And last, can a moonshot company escape its leader's political baggage? What if the company's success is in part bound up in that polarizing activity? Elon Musk is back in reassurance mode, professing his overarching vision and long-term goals for his car company that have little to do with car sales. Tesla stock is up 25% over the past week, with the biggest boost coming after an all-hands meeting at the company that conveyed the sense that Musk is back in the building, with the CEO issuing a sermon to reassure his faithful shareholders. Fast-tracking a private transportation transformation is at the heart of Musk's plans for Tesla, but dreams of a fleet of millions of robo-taxis and thousands of humanoid robots are becoming a little harder to sell while Musk is busy slashing through Washington. Take from that what you will, and keep in mind that the media certainly has a tendency to lean a little bit to the left. All right, Logic 247. That's our 24/7 around the clock Emini alert service. It's not just E-minis, it's also crude, gold, silver. Valerie did this recap last night at 7:30 p.m. Eastern. I didn't issue anything additional. Just didn't like the looks of it. So we're in week 347. Over the last 347 weeks, we have issued over 19,200 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. So since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 22 alerts this week. Still waiting on the outcome of 6. That gives us 16 actionable alerts, of which 2 or 13% would have been stopped out, again based on market structure, and that simple process we teach all of our passport holders. Last week we ended up with 44 total issued, 35 actionable alerts, of which 17% would have been stopped out. Again, based on market structure and that simple process we teach all of our passport holders. Telegram wants to update, so let's just let it do its thing. Doesn't take long. There we go. Okay, now Logic 247 has been around for 347 weeks, but for much longer. Our original alert service, much older than Logic 247, the concierge trade alerts, or the CTAs, they're different. Now the Logic alerts, each one comes with an entry price, an initial target, additional targets in most cases, and a final trade to target. The purpose of the alerts is to help you learn how to read a chart so that you can look at any chart at any time frame, and with the help of our humble indicator set, instinctively know what the next high probability move is. The market can only do one of three things: go up, go down, go sideways. So I mean, that's a lot, right? One of three things. Now, what does it do most of the time? It goes up or goes down. We do get into sideways consolidation when we hit a weekly trading zone, okay? But, again, when you look at a chart, you should be able to spot whatever the next high probability move is. You should be able to see where the next potential resistance is overhead, the next potential support below, and in doing so you reveal the windows of opportunity that lie in between. And that's where you want to be, in that window of opportunity. Remember, it only takes 2 points in the S&P to get your goal for the day, or 10 ticks in crude, or 10 ticks in gold. It takes 20 points on the Dow. Dow doesn't really have ticks, they just have points. It's the odd man. Okay? So, yeah, if you want to trade the logic alerts, go ahead, but make sure while you have the opportunity, use them to learn how to read the chart. And always remember, because what we've shown you after all those weeks and over 19,200 alerts, our best work resulted in 20% or less of the alerts being stopped out on a weekly basis. So if you're throwing away your time or treasure trying to find that holy grail That one, just one more filter. You know, I'm so close. I just need that one more thing. I'm telling you, it's never going to happen. Now, when an architect is ready to construct a building, he creates a blueprint. And as long as every workman on that job follows those plans, guess what? The building is going to be as projected, right? But the market is very unique. Most jobs you've ever had, you were expected to get it right every time, whatever it is you were doing. But with the markets, with all the many factors and participants and reasons why price can rise or fall, if you can develop an edge where on average you get stopped out 20% of the time, you have found the goose that lays the golden egg. And anything other than that, it's going to just break the golden egg. So, the concierge trade alerts, when possible, are published 5 minutes ahead of the open, as they were last night, 5:55 p.m. Eastern. If you're a member or trial member, be sure to read this information. Make sure you understand it. So last night, 5 minutes ahead of the open of the Wednesday session, which was 6 p.m. Eastern, tonight the Thursday session will begin at 6 p.m. Eastern. All of our members and all of our trial members had all of these targets: S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. Okay? 5 minutes ahead of the open. So let's go look at the chart. Well, we expected resistance here. This was resistance times 2, the 38% reverse fib, and the daily VBC. And yes, we did trade a little bit above it yesterday. We got up to 58.37 and a quarter, but we never made it to this area of resistance at 58.44 half. Okay. Now, last week, every day, the market found support at the black step line. Monday, Tuesday, Wednesday, Thursday, Friday. This week, Monday. And then yesterday, okay, we had a wide-ranging day on Monday. Tuesday was, well, it was a narrow range day. And now this resistance has kicked in, and it has sent us back to support at the black step line. As we discussed yesterday, if price overcomes the step line, then the next area for potential support will be the 24% fib and blue and climbing. On your smaller time frames, you can't see these numbers. You don't know that. You didn't know this was the 38 yesterday looking at a smaller time frame. You don't know this is the 24. So always start each trading day, whether you trade futures, stocks, crypto, Forex, ETFs. Spend 2 minutes with the daily chart. Institutional traders, the ones who move price because of their account size, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. Okay? So, if you'll spend 2 minutes with the daily chart of whatever you're getting ready to trade, you get a free look over the shoulder of the deep pockets that move price. Are they buying today Well, every time they do, they get slapped down so far. But they found support at the step line, just as we did last Monday, Tuesday, Wednesday, Thursday, and even Friday. Friday, this was a huge red candle down, but by the time we closed, we were back above the step line and right at that 24% fib retracement. So this is critical. The black step line is currently at 57.71. If we trade below that, then most likely we are headed to the 24% fib retracement. Blue and climbing should provide support, but that puts price in a position where it's trapped. Okay? Support at blue and climbing or the 24 or both. Resistance at the daily BBC and the 38. In fact, right now, from the high of the day, yesterday's high was 58.37 and a quarter. Today's high 58.36 and a half. So we failed to take out yesterday's high. And now that's definitely a sign of weakness. And it kind of looks like it wants to go lower. But remember the power of the black step line. All last week it held as support. Every time price would come down to it. Even when it got spiked last Friday, it still closed right above it. So could we close right here where we are now? Yeah, that's possible. Could we rally into the close? Sure. But keep in mind this area is resistance. Could we drop through the step line? You bet. Keep in mind where major support is, at the 24 and blue and climbing. Now, all of the alerts are created on a 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago. And if it's not broke, they say you should leave it alone. So I have. These targets were published last night, 5 minutes ahead of the open. The vertical line separates today, Wednesday. Back here's Tuesday. If I scroll back, there will be Monday. And it's been really just a flat sideways week. So if you've struggled this week, don't feel bad. It's been difficult. Now, on the open last night, this was the opening candle. If you look at the horizontal crosshair, this high, 58.35. This high, 58.35. Double top to the tick. And then this high actually made it to 36 and a half. But it failed to take out this high. That becomes a sign of weakness. The step line crosses blue and climbing. Price heads down to the BBC. We got red and falling overhead. And while the first move doesn't take us all the way to the short target, it does take us to a very important area. See right here where the step line, black step line, crossed red and falling. See that little cross right there? Okay. That would be these lows right here. Important prices, important areas, almost always tested. So support sent us back to the BBC. We got above it, but just not enough buying interest. So now what do we have? We have a high at 58.34 half. Remember, this was 58.35. This was 58.35. This was 34 half. 2 ticks below that double top. A sign of weakness. And down we came. And that was the 9:30 opening candle. We ran up, hit that double top, and it dropped us to the short target. Then we straddled the short target. We got below it and price came back up. And remember, when you trade through a short target on the pullback, that target will often become, in this case, good resistance. Opposite is true when you trade through the long target. So it did in fact become good resistance. So now we've come down. The zone below is at 57.68/69. The low so far, 72.5. Now you got the perfect stack: price, step line, red and falling, BBC. The green lines of the BBC stands for bull bear cross. So we're below the BBC, so we instinctively expect lower prices. The pullback to the BBC holds more often than it doesn't, but eventually it will trade through, as it did over here. So now see this low right here. What's that low? 57.76. So we traded through that low and got to 72.5. Price is now trying to reach up to resistance. Now the step line has started to hook a little bit to the right. It's leaning to the right. In other words, if I put my cursor here, you can see that red and falling is directly above the step line. So that means this is now potential resistance, this is potential resistance, and of course this is potential resistance. That's if there's enough buying interest to overcome those obstacles. Otherwise, what ultimately will happen is we'll end up at the zone. Now when we hit a zone, when price hits a zone, one of three things happens. 70% of the times consolidation, 20% of the times rejection, 10% of the time is the slice. Okay. And since we failed to take out this high from yesterday at 58.37 1/4, there was never any reason to really even be concerned with the long target. Okay, it was sideways, and then there comes the drop. This is extremely difficult trading. Okay, so again, if you've struggled this week or the last few weeks, we're technical traders, but the fundamentals that are happening right now, from tariffs to taxes to signal to you name it, I mean, the world is practically a dumpster fire. So you can choose to A, not trade, B, trade smaller, or C, be very, very cautious. So the market resumes its normal ebb and flow. On down. This is where we opened last night, traveled sideways, and then the low that was put in, once we got below the BBC, red and falling took us below. On the retracement, the pullback held, that sent us lower to right here. And you see right here where the step line crossed red and falling? You see that? That is that low right there. Important prices, important areas, almost always tested. That support turned red and falling into blue and climbing, got us back above the BBC. When we're above the BBC, we expect higher prices. When we're below the BBC, we expect lower prices. So we got a leg, that took us through the target. And then we got a retracement. This was an inside candle, followed by another inside candle. And then this was 11 o'clock. Big drop. 11:30. This is the current candle right now. Now this low right here, I already showed you where that low came from. This low, this is one of those times right here on this candle where the market doesn't necessarily do the next high probability thing. I mean, it is right at the low of this body right here. Okay. So support gave us a little bit of a bounce, but again, another inside candle. We've got red and falling overhead. The step line's on the verge of crossing the BBC. So probably before the broadcast ends, we'll be at the short target, possibly even at the zone below. Okay. 42,785 down to 765. That would be sufficient to give you your goal for the day. Even though it's been an odd session, there's still plenty of opportunity to get your goal for the day. On the Russell, this is where we opened last night. And remember, the targets were published 5 minutes ahead of the open. We're below the BBC, so we expect lower prices. Took us right down to the weekly zone. The zones are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. When price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance. Now, there's still one more zone up there at 2170 above us. We have quite a few below. And that looks like where we're headed is to 2090/91. Now, while this was an inside candle, this is an outside candle. In other words, the high of this candle is higher than the previous candle. The low of this candle is lower than the previous candle. So that's an inside candle because it didn't break the higher low of the previous candle. And this is an outside candle because it did break the previous high and the previous low. And what's the low so far? 2091.4. So in 4 ticks, we're going to hit the zone. We'll see what happens then. On the NQ, here's where we opened last night. We went sideways. We had blue and climbing overhead, and when it gets directly above price, it becomes potential resistance because it's often on its way to turning to red and falling. Now you can see how the pullback holds more often than not. It even held here for hours, gave way a little bit, gave way a little bit. In fact, this low here is this area right here. Okay. Price pulls up to the BBC, consolidates, drops to the target, through the target, and then down to the zone. 2213. Well, I didn't quite make it to the zone. This is the NQ. So the zone's 2213/14. So support bounced us up to the step line. Resistance. That sent us down through the weekly trading zone. Now 70% of the time is consolidation, 20% of the time rejection, 10% of the time the slice. So this 30-minute candle sliced through the zone, and then it retraced back to the zone it sliced through, and now it's heading lower. So we still have crude, gold, and silver. And Michael, just to show you where we're sitting, right on top of the step line. See that?
Yep. I've been kind of watching it this morning.
See, it's just
It is.
sitting right on.
It is working pretty much as expected.
We
Right?
got resistance where we talked about last
Yeah,
Thursday
there it is,
night
right there.
in the workshop,
Mm-hmm.
and we got support right there.
Yep.
If we trade through the step line,
Over and over
we're
and
at the
over.
24% fib retracement and blue and climbing.
And
I suspect you and I cannot hear each other, so
I can, well, I can hear you just fine, and I can hear me just fine. All right.
okay.
So I know it's not on my end. Hang on. Well, here.
It was on your end this morning, but anyway.
All right.
Okay.
Can everybody else hear me okay?
Yeah, I can hear you now.
Okay. Hang on. Let me shut it off on this computer over here. See, I got the meeting running beside this meeting, so I could hear myself the whole time, and I could hear you the whole time, but you couldn't hear me the whole time. That's kind of odd. Can you hear me now?
I hear you just fine.
Okay. All right. Well, I have the stuff over here right now.
All right, your charts look good, so if you want to take it,
Okay, yeah.
you've got it.
But I was saying,
Go ahead.
I got it. I was saying everything worked out pretty much exactly as we had thought it was going to, as far as the daily chart goes.
Yeah.
I was looking at it this morning and commenting on it this morning some when I could comment on it, when my connection was right and all that. Anyway, all right. So I think everything's good.
Did you get your problem resolved?
I think everything is working okay right now. What just happened between you and I don't understand, because I logged into this meeting on two computers just so I could be sure that my audio was going from me into this meeting and coming out of the meeting.
Mm-hmm.
That's, like, I can hear myself if the other one's on speaker over here. See, I don't know if you can hear me in that echo.
Oh yeah, it's horrible.
Yeah, it is horrible. But that says that what I'm saying is going into GoToWebinar and coming out of GoToWebinar.
Yeah.
So.
Yeah, no, it's working fine now, guys. If at some point you lose Michael's audio, type it into the question box if I don't have my headset on. Okay,
yes,
it's all yours.
I've been having problems today. All right, here we go then. Good afternoon, everyone. Today is Wednesday, the 26th day of March, 2025. Now, if you've not taken a free trial with us and you would like to, then just go here to mytradingiq.com, click on the purple button. There is no credit card required for the trial. Okay, click on that purple button. It's going to bring you to this page right here. And on this page, all the way asked for is your name, your email, and your phone number. Down at the bottom, look, I changed this. Down at the bottom, optional. If you use NinjaTrader and you want to use legacy indicators, we have Ninja charts. Please provide your machine ID. If you simply want to trade on Ninja, we don't need your machine ID. However, mandatory. TradingView is what we use in the room in the morning session. Please provide your TradingView username. If you do not have it yet, go here. That's here. And get your TradingView platform. Okay? That's all you need to do. I think I'm going to move the TradingView stuff up on this page. Get it right up to the top. All right. So that is down here. I did fix that yesterday, as I said I would, finally. But do that stuff and give us your TradingView login ID. Once you give us that, we'll be able to get your indicators indicating on your chart. All right, so today we had the fewest number of trades, but we actually had our best day of the week so far. I had technical issues from the start. I had technical issues. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 26th day of March, 2025. We made 60 ticks on the NQ in just 2 trades, and 36 ticks on the Russell, 36 ticks on gold, and 13 ticks on the ES. The only thing that we stopped out on today, I think, was the ES. So out of 23 trades, we had only one stop out. I believe that's correct, right? 2, 6, 16, 36, 11, 12, 15, 21, 31, 36, minus 10, minus 6, minus 2, 4, 5, 9, 11, 13. And 1260. Yeah, we just had one stop out of the 23 trades. 2 trades to get to the goal, 927. But either way, we got it done. 8 minutes, 2 trades. We were up to $1,200 with 10 contracts on. And we took a total of 23 trades this morning. So on the month now, we're at $21,985 over 13 business days, averaging $1,691 per 2-hour business day. On the year now, we've gotten our goal every single day, 50 out of 50 business days, and we've gone 66 business days since our last non-green day. We've now gone 459 business days since our last red day. Red day means we didn't get the goal for the day and we ended negative. All right. Now we've had a couple of days this month where we didn't have a ton of profit, but back in the day, $625 per contract was a lot of money. Now it's kind of a slow day. But if you go back, I mean, it's not that long though, just back to last year. Here's November. Any day you get over $500 is a good day. All right. And then we started doing things a little bit differently right here. You can see. All right. So I did say 2025 was going to be a much different year, and it is. All right. So let's get into the trades. All right. Let's start getting into the trades. We didn't have that many, that we have a lot to go over here. So we'll start out with the gold. And the gold actually had our second most trades right here. Like our first trade was right there on the gold, and we got a plus 11 on that one. I believe that is where we got the gold today. We had 2 ticks on the Russell and we had 11 ticks on gold. Then we had a break even, another break even, and then we went from 11 to 12, then 12 to 15, then 15 to 21, then 21 to 31, and then 31 to 36. Those were the trades we had on gold this morning. Okay, after that, there was a trade here that I missed. It looks like a trade here, right in here somewhere that I missed, right there, that I missed. A trade here that I missed. I did have technical difficulties. That's why you see the first trade that we got the goal for the day on was right here at 9:47, because I didn't start until like right about here at 9:40, right about here. Weird problems today too. 3 different problems. One was my monitor, one was the internet, and one was GoToWebinar. Anyway, gold has got a long trade right here, right now. Okay, the blue got down to the oversold by itself, and it's pulled back a little bit. Now, did it go enough to get the stop to break even? That's the real question. The entry point should have been right here at 21.6, and if it made it up to 22.1, I can't tell if that bar actually hit 22.1 or 22.0. The way to check that, click on this thing right here, click on the data window tab, hover over it, it'll give you the high and low right here. Okay, so the high of that bar was 22.1, so it did not make it 5 ticks. It only made it 4 ticks from the open. So it's still a valid trade if you want to jump on that. Right, and that was cool. Let me slide that over here, and we'll go to the Russell now. The Russell, we had this triangle right here that we were trading in, and we were able to take some trades within the triangle, and everything worked out as pretty much as we expected within the triangle. But on the Russell, this is the whole Russell right here. This is our whole day on the Russell right here. Our first trade was right here. On the Russell, what do we get? We got 2 ticks profit on the first trade, 4 ticks profit on that one to get us to +6, and 10 ticks profit on that to get us to 16, and then 20 ticks profit on that to get us to 36. And that was all that we did with the Russell. It looks like there was another trade in here during the break. There was a trade right in here that would have stopped you out. It was a short right there. Well, I don't know. 125 tick stop, it might not have. Your entry would have been here. It pulled back about 18 ticks. No, it would have been okay. You would have been okay on that trade. This one right here, you would have shorted the open of that bar. That gone plenty to get your stop to break even or even lock in profit. This one right here, same thing, plenty to get your stop to break even. This one right here, that one might have stopped you out. Okay, this would have been okay. This would have been okay. And that was the Russell. We see the whole day in the Russell is right here. Right, the market is really is really like it. Pause. If it's like that, how do I decide when a market isn't working for the day? Decide not to trade that market for that day. Let me finish going over this again, and I'll answer that for you, okay? All right, so, because it's a multi-part answer. All right, but it's a good question. All right, so this was the ES. Now on the ES, we had a break even, then a break even, then we stopped out on our first trade on the ES. We were minus 10. We got +4 on that to get us to -6, and we got +4 again to get us to -2. Get us to +4. Then we got +1 to get us to +5, and then a +4 to get us to +9, and a +2 to get us to +11, and finally 2 more here to get us to +13, and whatever that was, I didn't put in. And that looks like it's where we ended up with the ES right here. And going through it all right. See, there was a good trade right there. Another trade right here that would have worked out. A trade right here that would have worked out. Yeah, that's what kept happening this morning. Is my audio still on? I can't tell. Hang on. Yeah, I can. Let me go over here. And let me turn this on over here. There. Yep. Okay, my audio is still on. Because we never did that this morning. It just seemed to shut my audio off. But anyway, there was another short here, a long here, a short here, a long there, a short there. Those are, you had pullbacks on every one of those ones. It's got a flat spot. You had pullbacks, so it wasn't an easy win if it was a win. Like this was a short right here, pulled all the way back up here before it went down. This probably stopped you out. It would have been the entry of this bar right here. So it actually went up 7 ticks, 6 ticks before it pulled back. So that would have been okay trade. This was a short. That would have been all right. This was a long right here. That would have been okay. A short right here at the open of that bar would have been okay. A short right here at the open of that bar would have been okay. It wasn't easy trading today. All right, and then let me just let me do this. All right, so you're on a 7 tick range. Okay, so there's a couple of things you have to think about. What kind of trading are you planning on doing? Are you going to do trend trading, or are you going to do trading? Are you going to trading like for the chop? You're going to be divergence trading in the chop, right? If you're going to be divergence trading, well, first of all, you want to make sure you're not trending, and if you're going to be trend trading, you want to make sure you're not in chop. And the way to see that is look at these numbers right here. If you're on a 7 range, for instance, and a lot of these numbers are 7 or greater, and you have complete legs down with the retracements, then you're not in the trend. So you're probably not going to want to trade that type of trade at that point. But if you have legs down with retracements and legs down with retracements, and you're in a trend, a clear trend, well, then you can trade with the trend stuff. Now, if you're trading with the trend stuff, that changes what you're looking at down here. Okay. And, you know, if you're doing it with just the TV trades, for instance, get rid of the slingshot down here, but if you're doing it with just the TV trades and you're doing it with the background color, oops, you had the background color on there instead of using the YBR, you do it basically the same way, just with the background color on or off, depending on what you're trading. So if you're trading with the trend, then you have to decide, are you going to trade aggressively with the trend, or are you going to trade conservatively with the trend? And the question there, the response to that question is how big are the leg lengths? Okay, because if you have big leg lengths, then you're going to do the conservative way. Because big leg lengths are going to cause flat spots at the top and bottom. But if you have short leg lengths that do trend, but down pulls back, goes down, pulls back, goes down, pulls back. That's when you have the short, the quick moves up and down, like this stuff right in here. right? These weren't actually retracing, I mean, continuing the trend. But when you have the short moves like that, then that's when you can be aggressive. So, I mean, you start out aggressive, right? It pulls back up and you start out aggressive. You short it right here at the open of that bar, right? When it's down, puts in a lower swing, you're still thinking aggressive, but it dragged the leg out a little bit right here by dragging out this down here at the bottom. So it pulls back up and it gets all the way up here. Now, because it did this at the bottom, it's likely to give you a deeper pullback. When you see it goes beyond 50% right here, and this bar closed up beyond 50%, that's when did I cut out again? Hang on. There. All right, so I'm gonna put that on over there so I can hear it a little bit. I can actually see it too. So like right here, you see if you're going to trade with the trend, you could have been aggressive and gotten long at the open of that bar. Wait to see if it puts in a higher swing. If it does put in a higher swing, well then see how much higher of a swing it puts in. Okay, if it puts in a much higher swing, then the pullback's likely to be deep. And if the pullback's deep, you got to get a flat spot. If you're expecting a flat spot and you're trading with the trend, then trade conservative. Wait till it comes out of the oversold and jump in the trade. See what I mean? The difference between trading aggressive with the trend and trading conservative with the trend is if you're conservative, the flat spots are never going to bother you because you're waiting for it to come out of the oversold. If you're aggressive, then you're subject to the flat spots. But if it's giving you short legs and short pullbacks, then you're going to make your goal for the day and get your money right away and be done. It's like this right here did not put in a higher swing. So you could be aggressive and go long right now, right here from the open of that bar. It didn't put in a higher swing. You didn't get a flat spot at the top. Now the risk about this is you could end up with a flat spot down here at the bottom, like that. That's the risk. So in this case right here, it went 6 ticks into profit from the entry of that bar. You could have locked in a little profit or at least gotten your stop to break even. All right, this is the SU. And so now you're in some chop. And it's not bad that you're in chop, but as long as you recognize that you're in chop, then just put this back on here and say up. And just realizing how much of a delay there is between what I say and what you hear. It's actually a couple of seconds. So I'll go slower. Now, the trade that we had earlier on was over here on gold. Here it is. Stop is going to break even. Lock in 10 ticks. Now we're getting up toward the swing high. So I'm going to trail my stop a little bit closer. I'm locking 13 ticks. Swing high is right here at 3.3. Right there. Okay. It should find resistance there and probably push back. So with 10 contracts on, this is $1,300 right here. That's 14, 15, 16, 17, 18, 19. All right, so we're up to 13. And there was a trade here on the Russell I didn't see. A trade here on the Russell I didn't see. This short back here on the ES. And when I talked about trading with the trend, being aggressive, you had this one right here that you had 6 ticks on. And then I was worried about the flat spot down here. We did get a flat spot. Then it retraced and it gave you this opportunity right here. All right, now if you're being aggressive and you're trading chop, then you don't really care about the trend. So you would have just shorted right there. But now you see it's established a trend because we have lower highs and lower lows. So now you wait for a pullback. You had this drag out down here at the bottom. So there's a chance it's going to drag out at the top too. Okay, doesn't seem to be the case. So we'll just wait and let that develop. Now over here, we don't really have anything there. We don't have anything there. We had that long right there and the short right here a minute ago. We had this long right here that we took 13 ticks on. It did get up to the prior swing high and it got rejected by it. That's why I trail my stop close when it gets up to the prior swing high. You see that? It went through it by 1 tick and it rejected it. Okay, so this right here is actually a long trade from the open of that bar right there on the ES. I don't think it's gone 4 ticks into profit, has it? No, it's only gone 3 ticks. So you could still jump on that if you wanted to. Well, you could have a minute ago. No, you can't. I waited way too long. When I said you could still jump on that, I put the order on and I missed it. But now it's too late. And over here now on the NQ, we're in some chop here too. Now this morning, I don't remember what market I did. I think it was the Russell. I identified different types of chop. Triangle chop. Channel chop. Bugle. Right. The worst kind is this. The best kind is this. The second best kind is this. The problem with this, I mean, you can see the top and bottom in this pretty clearly, but it diminishes. The move diminishes as you get closer and closer to the apex of it. And this, you can see the top and bottom pretty clearly. That's what makes that the best. And this, you don't know where the top and bottom are. So in that article I wrote about a month, maybe 2 months ago, about trailing the stop, I talked about the different kinds of chop. I think it was in that. I wrote that. All right, so it's 120, and so far we've had one gold trade. The black is leading the blue right here. Well, the blue hasn't painted, but the black is still leading it. And then, well, that is no good. I just looked at my chart. All right, came back. Now, there was just a short right here at the top of that bar on the NQ that I missed. And it looks like he's going to give us an opportunity over here too. Nothing. All right, well, let me say this again for anybody that's watching on YouTube. If you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button, no credit card required. Come to the registration page. Fill this out, and down at the bottom, I changed this. The NinjaTrader ID, machine ID, the NinjaTrader machine ID is optional. Okay. When you go sign up, if you want to use what we have for Ninja Charts, the TradingView username is what they call it. It's mandatory. If you want to have charts, we need to get that TradingView username from you. All right. Just click on this link. If you don't have TradingView, click on that link right there to go get it. Okay. So you see we don't have anything here right now. All right. Still don't have anything. It's 1:23, so we have about 7 minutes left. Did I answer your question, Dan? I guess I'd probably give you a whole bunch of information. Great. I never thought I'd say that. But trading the chop is great. There's a bunch of money today. Like we just had a trade right here. You could have made goal for the day on that one. A trade right here. You could have made the goal for the day on that one. Trade right here. You could have made the goal for the day on that one. And that's in the chop that we've had since we started right now in this session. And that's just on the NQ. It's not a simple answer. I mean, the simple answer would be if you like to trade with the trend and you look at a market and it's choppy, then don't trade. Okay, go to another market that's trending. And if you don't find anything that's trending and you want to trade with the trend, then don't trade. Trade the chop. Well, now we're good at it. We used to avoid it like the plague. But you can see in here, you know, we've always said you spend 90% of the time waiting for the trade and 10% of the time actually trading. That's because 90% of the time, you know, you're in chop, you're waiting for it to come out of the chop, where you have those 2 or 3 legs of trend where you can try to place the trades. But now we trade the chop and then it starts to trend. You're like, it's trending. Now I get to go to the bathroom. So I had said, you know, back here in December, it's a paradigm shift right there. You guys remember that? Change the way you think about the markets. I'm showing you that. We just missed a trade here in the job on the ES. Okay, and you see this down here. That trades with the chop. It actually trades well anyway, no matter what you do. But you see all the big numbers on there? 40, 47, 50, 50. That's how far it went on the actual trade bar. The bar before it, the one with the star and the label, is when it said long, long. That's an S, it says short. That's an S, it says short. Okay. So they coincide a lot. They overlap. It's a shift in the matrix, right, John? All right, so right here on the S, that is a short. Now, it's already gone far enough into profit to not take the trade. You know, the entry point should over here is 64, and it's already dropped down to 6. $2.25. So it already went 7 ticks into profit. So it's too late to get into it if you didn't get into it. This was a trade up. It's about to give another one right here. If we get a down close on this bar, it'll probably give us an opportunity to go long back up to the top of the chop. And we'll try to take that if we can get it. And that'll probably be our last trade of the session. That's the low of the day right there, by the way, right there. That is the low of the day. Now the black went with the blue, so it's not a valid trade. The blue didn't lead by itself. It's not a valid trade. And look, Now we have a lower high. I'm sorry, a lower low with a lower high. So now we have a trend suddenly. That's what I was trying to show you, Dan. Dan just said what I noticed is that he gets into a trade and it basically stops him out to the tick. And that's what I was trying to illustrate to you. This is a trend trade right here on the ES. What I was trying to illustrate to you is, the last couple of days when the markets have been slow, I've been trying to tell you, when you have a leg like this, the pullback should be 50%. If it's 50% right here, and you're expecting a 50% retracement, then getting in at the open is probably good. But if, let's say you're in a trend and like this right in here, okay, where this put in a lower swing and it pulled back up. Now you should have expected a 50% retracement on that, but right here it went further than 50%, right? So when it goes further than 50%, there's a chance it's going to keep going, possibly up to the prior swing high. So instead of trying to get into the open of the bar, that would be the trigger bar, let it go a little further and get in when it goes a little further, okay? Like right here, I shorted that just a minute ago. Here it is. I'm going to go to break even on it. And I'm going to lock in 4 ticks and 6 ticks and 8 ticks, and we're out with 8. Okay, now you see how we got right down to the swing low? My entry was just a little above here. Okay. So what I'm saying is don't be afraid to not get it right at the open and to give it a chance to go a little further in the direction that it was going in before you trade opposite that direction. That's what I'm suggesting. Okay. All right. Well, it is time for me to wrap it up, so I will do that.
We lost you again.
But you see how we have lower highs and lower lows right now? Lower lows, lower highs. This should make it down to right about here. It should be. All right. I just saw my screens flicker and I was listening to see if I could hear myself on the other computer.
No, you're
All
back.
right.
You're back now.
Good. I really hate hearing myself like that. But anyway, here we go. I am going to wrap it up. So today we ended up with $1,002 per contract, 60, 36, 36, and 13. On the month now we're at $21,985 per contract. On the year, $79,467 per contract. 24/20, we're averaging $1,900 an hour. 8.25 hours worked so far this year for a profit of $15,675 on the third contract right now until I believe Tuesday next week. All right, if you haven't taken the trial, go to mytradingiq.com, click on the purple button, no credit card required, and on the registration page, I actually finally fixed it. Down here, optional, if you have Ninja Trader, give us your machine ID. If you want to use the Ninja charts, give us a machine ID. If you just want to trade on Ninja, we don't need the machine ID. Mandatory though, TradingView. If you want to use charts, you need to provide the TradingView username. If you don't have one, go here. I put the link right there to get it. All right, that is it. With that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Plane is ready.
Yeah. Recap of the morning session.
Today it took 8 minutes and 2 trades to get to $1,200 with 10 contracts on.
There was a question from Jeff Delapina and YouTube. You mentioned goal for the day. What is the goal?
The goal is to get to $100 per contract. All right. So if I'm trading just one contract, it doesn't mean for each market, it means just $100 total. Right? And I know that seems like a small amount, and it is a relatively small amount, but it's an amount that we can do every single day. And that's what you need. You need something that you can achieve every day for a goal. And as you get better and more consistent, you can increase the goal, or you can increase the contracts, or you can increase both. Recommend the contracts. There. I hope that answers your question, Jeff.
2 points in the ES is $100 per contract.
It is.
And if you trade one contract long enough to increase your account balance by $2,000, you can add a second contract. Now the same 2 points are worth $200 a day. And by the time you earn your way up to 5 contracts, you're at $500 a day. And when you earn your way up to 10 contracts, you're at $1,000 a day. So it's all laid out in our 24/20 blueprint, step by step. How to go from 1 to 20 contracts over a period of 24 months. So take the trial, Jeff. Check it out.
Yep.
All right. Okay. All right, Michael. Have a great afternoon.
All right. Thanks, man. You too.
Okay, we've covered everything but crude, gold, and silver. This was the open last night on crude. So we had a pretty good sized 30-minute candle. In fact, we overshot right here, this bearish cross, okay? We spiked it, but by the time the 30-minute candle closed, we were right at the bearish cross, okay? When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. So again, we spiked through the area, but when the 30-minute candle closed, we were just basically right at that bearish cross. That's when the red line gets below the green line. So we consolidated sideways. Blue and climbing got directly above price. When it does, it often becomes resistance because it's on its way to turning into red and falling, as it did. So that took us down to the zone at 69.10/15. Again, the zones are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week.
Hey, D.
Yep.
I changed back to the other internet, and I want to see if it fixed the delay any on my audio. Seems like it did. Okay.
I can hear you fine. I don't know anything about a delay. Before you'd be talking, and then all of a sudden it would be silence, and then all of a sudden you'd be talking again.
All right.
So
well, I'm gonna try it this way again. Hopefully it goes
you sound
well.
loud and clear and normal right now. So.
Okay. Good. Thank you.
Okay.
Sorry to interrupt.
All right, guys. So we hit the zone, which we expect to be support. When price drops to a zone, we expect support until proven otherwise. Okay. Here we got support. We had a green candle bounce, then it reversed and closed us below the zone. And as you can see, these lows, it's right there. So we get a leg, we get a retracement. The pull back to the BBC holds more often than not. So we pull back to the BBC and we get a bounce up to blue and climbing, but because it's directly above price, now it's become resistance on its way to red and falling, which takes us down to the zone. Support will always send the market looking for resistance, which you'll see this high, double top resistance sends us back to the zone. Got a little doji right there in this 3-candle consolidation. From this support, we get back above the BBC. We got the perfect stack, price, step line, blue and climbing, BBC. And it takes us right up to the long target. We even spiked spike it a little bit. It's like the high yesterday was 69.68. This high was 69.70. So we spiked the long target a couple times, pulled back into blue and climbing, got another leg out of it. Now we've retraced back to the VBC. We've traded through it, but this candle hasn't closed yet. In fact, we're only 9 minutes into the life of this 30-minute candle. But we have red and falling overhead. Now, the pullback to the VBC, it holds more often than it doesn't. But eventually it will trade through. And with red and falling overhead, this could be one of those opportunities where it does in fact trade through. And so you've got potential support here and here and here. But if you get down here to 69.45, you should be able to short that to 69.35. And that's enough to get your goal for the day. 10 ticks is all it takes. Now if price continues to head down, right here is a bullish cross. That's where the blue line gets above the green line. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. But again, this candle hasn't closed. With red and falling overhead, I suspect we'll either consolidate here at the BBC or potentially trade through it. As you can see over here, once it became red and falling, it took us through the BBC. Okay. So we got a leg, we got a retracement, we got a leg, we got a retracement. Question now is the pullback going to hold and give us another leg to the upside? Or is it going to give us an opportunity to trade down to this previous bullish cross? Below that, you've got potential support there. And then you're at the zone, 69.10/15. So you got to be patient. You got to get below. This area is potential support. This is potential support. You got to get down into this area so you have at least 10 ticks of room to run before you run into, again, potential support. That's what I mean by market structure. That's what I mean by being able to read the chart. The Logic 247, there's over 19,200 individual handcrafted alerts, and what we've averaged on a weekly basis is 20% or less being stopped out based on market structure and the simple process that we teach all of our passport holders. So I stress it every day, use the logic alerts to learn how to read the chart. Price can only do one of three things. Okay? You want to be able to look at a chart and know what the most high probability thing is based upon the structure of the market. Does that mean you're going to be right 100% of the time once you can read the chart? No. Once you learn to read the chart, you're going to probably get stopped out 20% of the time. And for most of you, if you only got stopped out 20% of the time, you'd be walking on air. Such is the nature of the beast. Okay. All right, so that's crude. We're at a decision point here. Gold. Here's where we opened last night. Below the BBC, we expect lower prices, and we got them. Buyers came in a little early. We were looking for them to come in right here, based off this low. Buyers came in early, drove us up to the zone overhead. Again, we expect that to be resistance till proven otherwise. Resistance will send the market looking for support, which it found at the short target. Again, the targets were published 5 minutes ahead of the open last night. Support sends us to resistance. Resistance sends us back to support. Now, this support right here, you see where the step line crossed, red and falling, turning it to blue and climbing? That spot right there, support. You should expect that to be support. And guess what? 20% of the time or less, it won't be. There is no holy grail. From support, we bounce back up to resistance. So now we got a triple top up here. We get back below the zone. Blue and climbing turns to red and falling. So we get a leg and we get a retracement. Pull back holds. And then we get a leg and a retracement. And then a leg. And now another retracement. The step line has crossed red and falling. That could potentially lead to higher prices, but I think the high probability move from here would be 30.20 to 30.19, and that's your goal for the day. 30.20, 30.19. A $1 move in gold is worth $100 per contract traded. Silver. Here's where we open. Drop to the VVC, support, pull back hill. We got a bounce, but the bounce didn't quite take us all the way to the long target. It did bounce us enough to get your goal for the day. You only need 2 pennies in silver. So from this resistance, market's going to go look for some support. And this is one of those times when it found it at a rather odd spot. Okay. We would typically expect support here or at the zone. But as I've said, after 19,200 plus alerts, we know 20% of the time the market is not going to do the next high probability thing. And there's nothing you can do about that. Okay? Going back to the drawing board and starting from scratch, that's not going to fix anything. It's not going to change anything. The market's going to do what the market's going to do. When it gives you a clear opportunity and you have a definable edge, you simply take advantage of it. So from the high at 34.50, we dropped back into this area here. And that has held, as that area has held as support. It bounced us back up to the BBC into red and falling. And so I would wait for price to take out this low. 34.05 down to 34.03. That would be enough to get your goal for the day. Okay, on the daily chart, we have now officially traded through the step line. Now, on Friday, we traded through it, but by the close of the session, it held a support. All last week, support, 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 support. Yesterday support, or I'm sorry, Monday support. Yeah, it was yesterday, Tuesday, now here's today. Now, what did we say earlier? We said if price trades through the step line, then right here, this is that gap higher open that we had Monday night, which has not been filled. And it's extremely rare for gaps on the indices not to fill. In fact, you only get gaps on the indices because they trade around the clock. Sunday night and occasionally in earnings season, when somebody big reports after the bell, if there's a big hit or a miss, you may get a small gap there, but those gaps typically close. They typically close within a few hours, the same session. And there are occasions when it takes a few days. So from the gap higher open Sunday night, this is Monday, Tuesday, Wednesday. If price drops to the 24% fib retracement, now these are reverse fibs, you've got support times 2 here. 24% fib, blue and climbing. 2 good reasons for the market to find support. And in doing so, will also fill the gap. On the 30-minute chart, this was the gap Sunday night. This was the opening candle Sunday night at 6 p.m. Eastern. You had a leg and a retracement, a leg and a retracement, and a leg and a retracement, and a leg and a retracement, and a leg and a retracement. As I said, the pullback holds more often than not. Okay. So now we need to get down to, let's see, that low was 57.12. That low is 57.17. So to close the gap, we need to go all the way to 57.17. Okay. So that might not happen until tomorrow, because the market could very well find support at this area where we opened Sunday night. But everything is played out as we discussed Thursday night in the members only workshop, where we thought price would go and where it would find resistance. And now we're below the step line. As long as we stay below the step line, expect price. Now I said we needed to go to 57.17. The 24% reverse fib is at 57.18 and a quarter. And blue and climbing is currently at 57.05. Okay, so it's this area right here. And that could be a hard drop heading into the close. Okay, all right. To become a member, go to mytradingiq.com and understand who we are, what we do. Then send an email to support@cfrn.net. In the subject line, put, I want to become a member. In the body of the email, put your name and your phone number. We're not going to call you. You have my word. We don't have time, but we will send you an email that explains everything it means to become a member, a passport holder. And there will be a link you can click to actually join. Number one, you're going to get 2 hours of live training every trading day. 9 out of 10 new traders fail because they don't have anyone to teach them how to do the job. Whatever profession you pursue in life, baker, banker, candlestick maker, you need somebody to show you how to do it. Sadly, 9 out of 10 new traders, they buy books, they buy courses, they watch YouTube videos, and there's really nothing wrong with those, but they're not a replacement for a living, breathing human being putting on, taking off trades live in real time answering all of your questions while you trade along in your demo account so that you can qualify to actually go live. Once the 2420 blueprint gives you the green light to go live, then that will walk you through adding additional contracts at the right time. You only add one at a time, and you only add with profit you earned in the market. The first contract you trade, that's funded with your startup capital, money you use to open your account. But if you follow the 2420 blueprint, then everything going forward, every time you add a new contract, when the blueprint says it's time to add number 4, you're adding it with profit you earned in the market. If you have the ability, the self-discipline, to follow the blueprint as it's laid out, then that greatly diminishes the potential for you to blow up another account. Along with 2 hours of live interactive training every trading day, you also get private one-on-one mentoring, the strategy you learn, the indicators that you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. That's why it's important that you learn how to read the chart, so you know where to anticipate resistance, where to anticipate support. And in doing so, you reveal the windows of opportunity that live between those 2 points. As a passport holder, you'll get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published each evening. On Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones. We've published the zones every week for our members since December 14th of 2009, a little over 15 years. Once they're published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. You're able, as a passport holder, to attend the members-only workshops on Thursday night, and you get the golden key that opens all the private channels in Telegram. We got public channels, we got private channels, but when you become a passport holder, you have access to everything. Just visit mytradingiq.com and then send your email to support@cfrn.net, and we'll get you up and running. Let's wrap it up with our good word for the day. Yesterday we talked about hope for the future. Today, changing how you pray. Ephesians 1:16. I have not stopped giving thanks to you, remembering you in my prayers. Bible prayers are powerful. They put things into perspective. For example, Paul prayed that God would give the Ephesians the spirit of wisdom and revelation, that you may know him better. I pray that the eyes of your heart may be enlightened, in order that you may know the hope to which he has called you, and his incomparably great power. Ephesians 1:17 through 19. With this model in mind, American author Johanna Reardon writes this. Number 1, make your prayers God-centered. The Creator of the universe has given you the privilege of bringing your request to Him. When you tell God how great He is, you're filled with an expectancy that something great can happen, because you're talking to the one who can do anything. Number 2, make them praise-filled. Paul starts by saying, I have not stopped giving thanks for you. The key isn't to focus on your troubles, but to thank God and praise Him because He knows what He's doing. Learn to say, I don't know why I'm having this problem, Lord, and I would love for you to change things. But if you don't, I know you will use it for my good in my life. And number 3, make them life-changing. Most of our prayers are asking God to change our circumstances. But maybe He wants to change you. That doesn't mean He won't ever intervene. He supplies needs, opens doors, and heals people in incredible ways every day. But when you spend years praying for something that never happens, it may be a clue you're not praying the right way. Paul found joy in a prison cell. And when God opens your eyes, you'll find joy in your situation as well. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.